Today I'll define key terms regularly used on Bigger Sister channel as part of our economic empowerment program for sex workers. The aim of the educational program is to improve the well-being for sex workers, but to do that I'll need to unpack what that actually means, because we can't get there if we don't know what it is. Financial well-being is one framework to look at our personal finance. The reason I want to start and end here is because financial wellness is a holistic approach, and we know that money affects everything in your life. Therefore, everything in your life affects your money. Financial well-being is used interchangeably with financial wellness. Much like physical or mental wellness, financial wellness is crucial to an individual's health and existence in modern society. To put it more simply, financial well-being refers to your understanding of finance and the financial aspects in your life. Generally speaking, financial well-being is an objective process, meaning there are general understandings and agreement about what good financial management looks like, outside of the subjective experience, your personal experience. Many sex workers enter the industry because they want to change their financial situation, but we learn pretty quickly that our income is incredibly unstable and inconsistent, and improving our financial well-being might not be as easy as we first assumed. The things that we are taught when we are younger from our parents, our friends, or even experts work under the premise that you will have a fixed wage from an employer. Therefore, it is no wonder why members of the sex working community might have difficulty with finances in comparison to the other working force. That's why I'm here today. I'm going to try giving some more tailored support to our community. But what are the components that determine your financial well-being? When we use this term in this educational program, specifically for sex workers, I'm referring to 6 different concepts. They are financial literacy, financial capabilities, financial inclusion, financial attitude, financial behaviours, and finally, financial resilience. These concepts shape and impact your financial experience, and that's why I really want to unpack it so you know exactly what I mean when I use these terms. Let's start with financial literacy. Financial literacy informs your financial well-being. Literacy as a standalone concept means competency or knowledge about a certain subject or topic. Apply that to the financial landscape and it represents an individual's capacity or ability for knowledge around finance, which in turn will help them make informed decisions and effective decisions about their personal finance. Examples of good financial literacy would be things like saving, investing, borrowing, and managing debt. On top of these basic skills, good financial literacy can include things like understanding things like financial products and services, such as loans, everyday credit cards, insurance. Not only does good financial literacy look like you understand these topics, but you can recognize the benefits and risks associated with that product, and you're able to discern what is a more suitable choice for you and your needs. Having a good foundation of financial literacy helps individuals navigate the financial world by informing their decision making and goal setting, which in turn increases their overall financial well-being. Think of it this way: if the financial landscape was a strip club, then financial literacy would be a type of hustle. Take, for example, an experienced stripper with high financial literacy, or in this case, the hustle. She sees 2 potential customers, and by only exchanging a few words, she knows who to spend her time with, and she knows exactly how much time to spend with them before she moves on. Compare that with a baby stripper who spends excessive amounts of time with one client that only ends up buying 1 dance. We know that the baby stripper from this example needs to improve their hustle. Just like the baby stripper needs to learn how to hustle, we also need to improve our financial literacy, especially if we don't know how to manage our personal finance or navigate the financial landscape to attain our financial goals. You don't get financial literacy automatically either. You have to earn it. It's not like makeup. If you do it enough times, you'll get better at it. You need to consciously work on improving it, kind of like learning how to draw or paint. Good financial literacy is going to look different for different people. While there are general principles that apply across the board, for sex workers, what we really need is financial literacy around managing cash, because it's a totally different skill set to a fixed wage income into a bank account. It's harder with cash. We don't have automated technology that distributes our income. We have to do it all manually. That's why I will be covering financial literacy with a sex worker lens as part of the Economic Empowerment Program, because you can't improve your financial wellbeing if you don't know how to do it. The next concept that we're going to investigate is financial capabilities. Financial capabilities is an individual's capacity or ability to effectively manage their finance. On the surface, it may seem like financial literacy and financial capabilities are two and the same, but they're actually quite different. The main difference between financial literacy and financial capabilities is theory versus practice. As discussed, financial literacy is the knowledge of products and financial concepts, while financial capabilities is about practice. If we go back to the stripper example from before, think about how there's a dance stage manager, and they know exactly what you need to do and how you need to do it. But that doesn't mean they can do it themselves or it's within their means or capacity. They just know the theory of how to do it, not the practice. Another way to look at the differences between financial literacy and financial capabilities is knowledge versus skill. You can have high knowledge and low skill, and this might look something like neurodivergence. Have you ever met someone that's quite quirky and they seem to know everything about money, but they just can't seem to apply themselves or implement the strategies that they recommend to others? That is an example of someone with good financial literacy but poor financial capabilities. And the opposite of that could be true. So think of someone with high financial capabilities versus low financial literacy. Think about men, certain men. They are not the brightest tools in the shed, but they seem to be falling upwards. They navigate the financial landscape with very little resistance. That brings me to financial inclusion. For sex workers, we have reduced capacity because of the stigmatization of our industry. That means you can have all the financial literacy in the world, but because banks and financial institutions discriminate against us, we cannot reach our fullest financial capabilities, and there's no repercussions to these rules. This is a form of financial exclusion, but it's not the only one. A good portion of financial products and services in the financial framework are not available to us because of our profession. For example, you have PayPal that shuts down our accounts, or payment processing companies like Stripe that refuse our business. Do you know what the implications are of financial exclusion? Think about it. If financial exclusion is a component that determines financial well-being and a component that determines your financial capabilities, which is also another component that determines your financial well-being, then that means you literally cannot be financially well after a certain point. It is impossible. There is a barrier that you cannot cross because of the financial exclusion. That means that until we can overcome financial exclusion, we're always going to be at an economic disadvantage compared to other people. That is why, as part of this economic empowerment education program, I will be researching the products and the services that are sex worker friendly and safe to access, because we need to know what options are available for us within the financial framework. But financial inclusion isn't the only thing that impacts our financial capabilities. Consider how sex workers don't get paid leave or sick leave. Consider how we don't get our tax or our super automatically deducted from our pay. Sex workers don't have these privileges. We don't have the same safeguards in place. Again, that's why I want to create an economic empowerment program for sex workers, because I want to improve our financial capabilities instead of raw dogging through the financial landscape and hoping for the best. One aspect that is often overlooked when people consider their financial capabilities is the importance of confidence in your decision making. But where do you get confidence from in the financial sphere? That is when your financial attitude comes into play. Simply put, financial attitudes is how you think and feel about finance. Your financial attitude is determined, influenced by many factors, but the 5 that seem to be most significant are financial upbringing. How did your family handle and manage money? This is often the most significant influence in how you think and feel about money in the future. The culture you're a part of. Did the society around you encourage spending on material items, or did they encourage saving? Education. Were you taught financial literacy through any informal or formal channels or settings? Personal experience. Have you ever been bankrupt, or has your family always bailed you out when you're in a financially sticky situation? These experiences help inform how you understand and manage your money. And finally, the media. Are you consuming media that is highlighting the importance of saving and tracking your income? Or are you consuming media that is encouraging you to spend money and live that material girl life? There are other factors that can impact your financial attitude. I remember the first time I held a big stack of cash in my hand. It gave me confidence, it gave me thrill, it gave me a bit of audacity. And how you feel, how you think, your attitude impacts your decision-making processes. Could be negative, could be positive. Until you are consciously cultivating the financial attitude that works for you, that you need, then you're going to be at the whim of your personal experiences, your environment, the people around you, and also other external influences. If you grew poor like me, then you probably have a byproduct financial attitude known as scarcity mindset. If you don't know what scarcity mindset is, it's this idea that there are limited resources and that if someone else has something, that there's less for you. So what that might look like in the industry is you might have your favorite pair of shoes or like lingerie that is very worn and needs to be replaced, but you're not willing to replace it because you don't know if you're going to find something that fits as good again. Or maybe it's you're not comfortable investing in your business because you don't know what the return is going to be, or you don't know like when your next paycheck is going to be. Your financial attitudes dictate your approach towards money. And that is why it will be one of the first topics I cover as part of the economic empowerment program for sex workers, because without the right financial attitude and approach for you, your financial behaviors cannot change. Just like financial literacy versus financial capabilities was about theory versus practice, the same applies for financial attitudes versus behaviors. We've just gone through what financial attitudes mean, but what do I mean when I say financial behaviors? Financial behaviors are behaviors that we take in regards to our money. It could be things like investing, saving, working. Our financial behaviors are informed by our financial attitudes, which are informed by our financial capabilities and heavily rely on our financial literacy. To use myself as an example, my financial attitude, as I mentioned before, is I have a scarcity mindset that I constantly have to reverse engineer. But how that impacts my behavior is I'm always working. Even when I'm at my most reduced capacity, the last thing to go is my ability to work because I think I need more money and I don't know how to rest. In other words, the knowledge that we have around money is influenced by a range of factors. It informs our possibilities and the actions we take with our finances. What you do with your money is up to you, but your financial well-being is heavily impacted by your financial behavior. And you might be negatively affecting your financial well-being and not be aware of it until it is too late. Take, for example, living outside of your means. Think about what would happen if someone was financially dependent on you and you were living outside of your means. This can cause stress, and stress causes or triggers other behaviors. So while you can do whatever you want with your money, we kind of want to cultivate positive financial behaviors that improve our financial well-being and complement our lifestyle choices. Financially stressed people are vulnerable people, and as sex workers, we don't need to be rendered any more vulnerable than we are. We deserve to have happy and healthy lives. Some of our behaviors are automated from a young age, like putting coins in a piggy bank, and others we have to learn for ourselves, like budgeting or controlling impulse buying. But then sometimes the whole financial landscape can shift, and our behaviors are not what they once were, and we are forced to change. How we change our financial behaviors is what determines our financial well-being. Consider the push towards a cashless society where all payments are taken by transfer or card. This change in the financial landscape is being felt by our community, and especially in the post-pandemic world, we have more challenges and limitations about how we manage our cash. It's easy to say, just use your bank account or your card, but remember, sex workers are regularly financially excluded, and that refers not just to the availability of services, but the accessibility. We are one of the only professions where our morality is called into question, and financial services can be denied to us on the basis of judgment and prejudice rather than statistics or evidence. While the consumer, us sex workers, bear the responsibility of educating ourselves and having a strong financial literacy foundation, it is up to these financial institutions to make available vital financial services that are necessary to navigate the modern world. There is very little recourse for sex workers to challenge these policies, and that is why I will improve financial inclusion for sex workers through this economic empowerment program. The importance of financial inclusion is essential for people to participate in the economy and achieve financial stability, especially as we move towards a cashless society. The final concept that we will discuss today is the idea of financial resilience. Financial resilience refers to an individual's capacity to withstand setbacks or shocks that are often unexpected. Examples of this might be unexpected illness, your pet, a death in the family, a pandemic that financially affected everyone. It could be chronic UTIs or thrush or a broken phone. Individual resilience can be drawn from a number of sources, and this includes things like economic resources, like savings or income. It could be financial products and services, so that's things like credit or investments. It could be an individual's financial literacy attitude or behavior, which is like your awareness of the situation, your ability to effectively manage it and respond to it. It could also be your individual social capital. So that's things like your social supports, like your friends and your family, or access to like government help. Part of the economic empowerment for sex workers is that by the end of this program, we should have the system set up to be financially resilient for most common setbacks. Now we can see how these concepts interplay, overlap, and influence each other, and how these ideas make up the concept of and our understanding of financial wellness. We can see that healthy financial habits and having good financial wellness is not only dependent on the individual, but also external factors like institutions and the accessibility to products and services, we can see that inclusion is crucial for economic participation and equal opportunity. The Economic Empowerment Program for Sex Workers takes a holistic approach and will not just be focusing on building and strengthening these individual factors, but one by one, but we'll also be looking at improving financial inclusion by finding safe, available, accessible products and services throughout the program. Thank you for unpacking the idea of financial wellness with me today, and going through these basic definitions. Now that we have a better idea of what financial wellness is, we can start making moves to improve it, and I'm looking forward to taking that step with you. I'll see you in a week's time, and in the meantime, if you can follow and subscribe or comment, I'd really appreciate it. Thank you.